Hey there, investors. Imagine jumping onto a stock hyped up on X, only to watch your portfolio crash like a bad movie ending. That's the reality of AMC stock. On May 28, 2025, AMC shares plummeted by 13% in a single day. A stark reminder that meme stock mania can hide some ugly truths. While the promise of a short squeeze or retail investor victory is thrilling, there are 5 hidden risks that could wipe out your investment. Stick with me as we uncover these dangers with the latest data and simple examples. This could save your hard-earned cash. First, let's tackle AMC's massive debt. As of March 31st, 2025, AMC is carrying $4.0882 billion in total debt, including $4.038.2 million in corporate borrowings and $50 million in finance lease liabilities. That's like a family drowning in credit card debt while barely covering the bills. This debt fuels huge interest payments, $343 million in interest expenses for its fiscal quarter ending in December of 2024, draining cash flow and limiting AMC's ability to upgrade theaters or weather revenue dips. If box office sales tank due to a weak movie slate, AMC could struggle to meet these payments, risking financial distress or worse, bankruptcy. This debt mountain is a ticking time bomb for investors. Next up is share dilution, a sneaky wealth destroyer. AMC has been issuing new shares like they're handing out free popcorn at the theater. As of March 31st, 2025, there are 433.14 million Class A common shares outstanding, a massive jump from 109.3 million in August 2020. That's nearly a 300% increase, meaning if you owned 100 shares in 2020, your stake is now worth less than a third of its original ownership. Imagine buying a slice of a company only to see it cut into smaller pieces for others. This dilution, used to raise cash for debt repayment, depresses the stock price and erodes shareholder value, making AMC a risky long-term hold. Now let's look at the movie theater industry, which is fighting an uphill battle. Streaming giants like Netflix and Disney Plus are keeping audiences at home, slashing theater attendance. According to Los Angeles Times, as of March 25th, 2025, the U.S. box office generated just $1.34 billion, down 7% from 2024, with March alone projected to drop 50% year over year. For AMC, this means fewer ticket sales even if they manage debt and dilution. It's like running a lemonade stand during a rainstorm. Customers just aren't showing up. Shorter theatrical release windows and fierce competition from streaming platforms further squeeze AMC's revenue, making it a tough bet in today's entertainment landscape. Fourth one is wild volatility, the heart-pounding roller coaster of AMC stock. On May 28, 2025, the stock dropped 13% in a single day, driven by social media hype on platforms like X rather than solid financials. As a meme stock, AMC's price swings are unpredictable, like betting on a race car that might crash at any moment. For example, retail investor sentiment can push the stock up 20% one day and down 15% the next, creating massive risks for those chasing quick gains. This volatility can lead to huge losses, especially for new investors who aren't ready for the wild ride. If you can't handle the ups and downs, AMC could leave you broke. Finally, AMC's operations are a high-stakes gamble. Their business relies on hit movies, but predicting blockbusters is like guessing tomorrow's weather. In the first quarter of 2025, AMC's operating costs and expenses totaled $1,008,400,000, with theater rent alone costing $218,100,000 for the first quarter of 2025. If big releases flop or schedules are sparse, attendance drops, squeezing revenue. For instance, a weak 2025 box office, already down 7%, hurts AMC's bottom line. It's like running a restaurant where you're never sure if customers will show up, but the bills keep piling up. This high-cost, unpredictable model makes AMC a risky investment. There you have it. 5 hidden risks that make AMC stock a dangerous play. A $4.0882 billion debt load, massive share dilution, industry headwinds, wild volatility, and operational uncertainties. The meme stock hype on X might be tempting, but these risks could wipe out your portfolio. Before you invest, do your own research. Consider safer options like diversified ETFs and consult a financial advisor. Links to the documents referenced in this research are provided in the video description for those interested in exploring further details. If you want more stock insights, then subscribe Finance Flowchart and like this video. Share your thoughts about AMC investing in the comments. Stay smart, stay safe, and happy investing.